Thank you. I'm Alex Darst. I'm a realtor here in Greenville. I got my license a couple years ago, and I've been doing it full time. I'm basically just going to do a deep dive into where we've come over the past year in our market, where we're at the moment, and then kind of where things are headed. So first off, I'll start with some local statistics. These are from the Greenville Association of Realtors, and I thought there was an interesting contrast between May of this year and May last year. You can see that the stats, there's a pretty big disparagement, and I think you'll probably know interest rates are the reason for that. Starting off, inventory just under 3,600 this May. Last May was around 2,600, so you can see that while it has increased, 3,600 is still very low for our area. And this is the entire, greater Greenville area, not just city limits or anything. Average percent of list price received, 98.9, that was almost 102%. So this time last year, people were paying over asking on average on every home. And so that's starting to go down now. Once we start to get into the, mid 90s, low 90s, you'll start to see that's an indicator of a shift to a buyer's market, but it is still a seller's market. Still, on average, people are getting what they're asking for their homes if they're pricing them correctly. Even though they're selling for less based off the asking, you can still see that homes are still appreciating. So $380,000 is the average sale price. $367,000 was this time last year. So homes are continuing to appreciate, even though the interest rates have changed the market a lot. But people are getting less of what they're asking for. Now, average days on market, this is probably one of the biggest changes we've seen. 44 now where it was 20. So you can see people have a little bit more time to make decisions in our market now. In the past, if it was priced right in a Greenville address, it would be a couple days, over asking, multiple offers. We're not seeing that as much now, but there are still some competitive price ranges. So what to kind of expect? It is still a seller's market. We're still seeing the homes continue to appreciate. There's still a lot, or not a lot, of contingencies and contracts. Sellers aren't paying for closing costs right now. It's still buyers paying for those. Once you get in the lower price ranges, things start to move a lot more quickly. So 300K and below, even 350K if it's a Greenville address, those homes are still moving fast. 200K, 250K, those are still, a lot of investors are in that market, in that price range. So that's something to take in consideration, because that's a lot of first-time home buyers that are looking in those price ranges, and you're competing with a lot of, pretty much that range appeals to a large group of buyers. So who does this market benefit? Of course, it benefits sellers. It's a seller's market. People who couldn't compete in the past when rates were low. So there are actually some there are some reasons why buyers are actually having an advantage based off or compared to last year, because last year rates were low. There was a frenzy. That frenzy has kind of slowed down, and now we're at the point where the market's stabilizing a bit, but still leaning towards the seller side. People with a lot of equity appreciation over the past year are in a good position to use that equity to purchase a new home. They can buy down their rate. They can use that to do a larger down payment, make their monthly payment lower. And unfortunately, who does this not benefit? First-time home buyers are still having a tough time in this market. People who could qualify in the past, interest rates were around 5.2% in May last year. They're about 7.4 now. So you can see how some people are just priced out completely from the market because of that. Investors as well, there's a lot of people who can't make properties cash flow if they're buying a investment property here in town. The rates just make it unreasonable. People who are flipping, the appreciation isn't what it was back in 2020 and 2021. So we're seeing less people doing flips in Greenville. So what does this mean for you as a homeowner? Appreciation has slowed. We can't expect, like we saw in 2020 and 2021, it was about 15 to 16% a year, which is incredible, especially if you have a portfolio of real estate, you really got to take advantage of that. Now we're looking at more, mid-single digit appreciation year over year here in Greenville. People are using their equity, so they're taking out money from their equity. They're spending more money updating their homes instead of buying their homes or buying new homes. In the past, you could go up the road and buy something for, 500 square foot more, another bedroom, and it would be about your same monthly payment because of the rates dropping so much. Now that's not the case, so people are updating their homes they have. So if you're a prospective home buyer, what does this mean for you? A lot less people are just getting up and moving, like I said, because of rates, and they can afford something more. Now people actually go through a major life change that initiates them needing to purchase. So that could be a job change, life stage transition, maybe you're retiring, maybe you're an empty nester, a growing family. That's what's causing people to move, not just the desire for a better, larger home. Home buyers have more time to make decisions. We saw the average days on market is higher. So more time to make decisions, less people competing for the same homes. And then, of course, we're still dealing with interest rate uncertainty. Nobody has a crystal ball, unfortunately. And that's what every article has that caveat in there, that we don't have a crystal ball, but here's what we think is going to happen, but nobody knows for sure. So rates have been on the decline for the past couple months. And as we go forward, they're expected to continue to decline throughout the rest of 2023 and 2024. Some people are saying they're going to get closer to 4%. Maybe again, we'll probably never see those 3%, 2% rates in our lifetime, unfortunately. But even what we have now at 7.4, historically, that's a very normal rate. Our market here in Greenville will remain strong. We've got about 16 people moving to Greenville a day, and that mixed with the low inventory means that prices are going to remain stable, which is great. We're not going to be like places in California and New York, some people in Florida who are actually going to have their appreciation decline. They're going to have depreciation over the next few years. We're going to continue to appreciate. We'll probably get back to that normal 6 to 8% year over year appreciation by the end of 2024 into 2025. So appreciation will slow down. That's kind of the main stuff. But the final point I just want to remind everyone about is real estate is hyper local. It's easy to listen to the doom and gloom that we hear on the headlines, and people talk about the national housing market. That doesn't exactly reflect our local market here in Greenville. Things are still very strong. Rates are normal, even though they're higher than what they've been in the past. And a lot of that fear that's pushed through the media, you can rest assured that here in Greenville, we'll continue to be able to take advantage of appreciation and continue to grow. So if anybody has any questions, feel free to ask them. I'm happy to take a few. If not, I believe my dad is up next, and he will go over insurance.
I have a question.
Yep.
So you mentioned the market, and I've heard this from other, like Greenville versus local, not national.
Mm-hmm.
And because of the influx, even though other areas might see a decline, and I'm surprised how strong some of the other markets are, frankly.
Yep.
But Greenville seems like, for the midterm, for as far as you can see, and don't see the future clearly, but it looks like a strong market to you.
Yep, it continues. I mean, the amount of people moving here, a lot of people talk about, people who are halfbacks, they lived up in New York, they come to Florida. That term is thrown around a lot, and it's actually true. I talk to those people a lot. A lot of people come up from Florida, they've got family in North Carolina or even up to New York, and they want to be close to them. So there's just a lot of people moving here. Inventory is low, and it's simple supply and demand, so it's going to continue to stay strong.
How is the commercial real estate market?
Yep, so I'm mainly residential. Commercial, it really depends on the asset class. So I know retail is not doing great right now. Office space isn't doing great. Self-storage, apartments, rates or rental rates have continued to rise. So those are still very strong in Greenville. We're kind of pushing towards a renter's nation. So, that amount of people that are renting in the U.S. has just continued to go up year over year. So those are some strong asset class, but it really depends based off of where in commercial. Yep.
This is just a comment. The first house that I bought in the 70s, interest rate was 8%.
Yeah.
And I haven't paid as much as 12.
Yep. Yeah, I've heard somebody told me recently they had 18% at one point, and that blew my mind. So 3 we'll probably never see again, but 5 to 7, if it continues on that track, not a bad rate at all. Yep.
Where do you see where people are coming to Greenville per se? Where else are they locating around the area? Like what's hot, as it were?
Yeah. It seems like North Carolina also has a lot of people moving to it. The Raleigh area has grown a ton. When I talk to those people who are on the fence about, North Carolina or South Carolina, our taxes are way lower. So, that's a huge decision maker for a lot of people is, it can lower their monthly payment just based off of the taxes and, you get similar quality of life. So, but North Carolina, a lot of people are moving there as well. Yep.
So based on your view of the real estate markets, would real estate be a good avenue to be investing in?
I would definitely say so. You may have heard the phrase that there's no technology that's going to replace the roof needed over somebody's head. So while there's other, industries that come and go, real estate's always going to remain the same. And even if I don't think anybody has regretted buying and holding real estate, especially for the long term. Flipping can be difficult, but if you're going to buy and hold for rentals, it's a great way to, grow wealth and take advantage of the cash flow and appreciation. Yep.
What are your thoughts about new construction and the old house?
Yeah, I think it kind of depends on where in Greenville you are. New construction if it's a Greenville address, it's typically expensive. I think there's if you're in the mid 200s and you're outside of Greenville, I think new construction can sometimes be a no-brainer. I know a lot of builders right now are offering incentives that they'll have their sister company who's a mortgage company and they'll offer like $10,000 for closing costs. And it's like, how do you pass that up for a new home, that amount of closing costs? So I think it's a great route to go, especially if you're a first-time home buyer. Yep.
What about local, as far as in South Carolina, not Greensville? Like what's hot, like Duncan, Landrum, Campbell, that?
Yeah, I get that.
Kind of be Greenville.
Yep. There's a lot of places that we've seen grow, like Simpsonville, obviously. Hopefully we don't waste power here. But Woodruff right now, Woodruff is getting the BMW battery factory. So there's a lot of builders who have started to go out to Woodruff. Anderson County is also very strong. But I really think kind of the hidden markets are around Woodruff right now. There's a lot of other places that have begun to get close to where Greenville is at that were, great places to invest in the past. But I think Woodruff is one of the places I direct people to if they're looking to take advantage of growth, for sure. Yes, sir.
Are you seeing a lot of high loans come on to the market every day?
I've seen more of those over the past year. I know there's a few different communities in town, and I mean, it's the opportunity to have somewhere to live that's yours for around, 100 to 150,000. So I've seen it more lately, for sure.
Talk about creative ways you've counseled people to figure out the down payment process as a first-time home buyer.
Yep, it's going to be person specific for sure. I come from the impression that putting more down is typically the way to go, but some people that's just not an option at all. So there's some first-time home buyers who couldn't, back to the new construction thing, there's some people that couldn't afford a home normally because of the amount of closing costs. Typically if it's a first-time home buyer, they're looking at around $8,000 in closing costs, and then you got your down payment. So some of those people, they're able to buy a home only because of new construction offering incentives But I really, I look into, I'll advise them, and typically I will have the mortgage professional advise them, probably more so than I do, about their specific situation because they're looking at the financials and everything. So,
How's the regulations on tiny homes affected their sales?
I don't see a lot of tiny homes on the market. I've seen a lot more lately, but a lot of people I see them on like for sale by owner and stuff like that a lot. A lot of people, buy and build them and use them as Airbnbs, that sort of thing. But I don't know. It's an interesting class. I wouldn't say I know a ton about it, and I don't know the regulations around it a lot because a lot of them are in communities that are, allow for it. And, typically you can just put one wherever you want, if you have land and it's zoned correctly. But, yeah, if it's an Airbnb property, I see a lot of people using them for those.
All right, so I am Geoff Darst. I am Alex's dad. I was joking with Stephen Huffman was in here at the beginning, and I was joking with him that I should have gone first because Alex showed up dressed better than me. His slides are prettier than mine. He's probably going to answer the questions better than I'm going to answer the questions and stuff. But anyway, so it's cool to come up here at the same time as him. Super proud of him and all the stuff that he's doing. He stayed part of the church and stuff after he's graduated, so it's nice to still come on Sunday and have him sit in the pew with us and the rest of our family. It's been a big week. I think they just announced in church my son's having a boy. So we were going to be happy either way. It's kind of silly that they busted this thing and we all jumped around because it was blue. And I was like, well, we all would have jumped around if it was pink, exactly the same. Nothing would have been different. But anyways, but it's officially a boy. So that's good. So, all right. So I'm going to talk about insurance. There's Arthur representation in the room. I was a little worried that Chris would be in here, but he's on security. So I was like, well, Chris is in here. He can't fact check me on everything I say. But he sent his daughter, I think, as his representation. So I'm gonna have to be a little careful. So I'm just gonna kind of blow through some things really quick, just the do's and don'ts of insurance. We're kind of in a unique market. It's unique because of a lot of the factors that are also impacting real estate. And it's not just something like I represent State Farm, but it's kind of across the insurance industry altogether. The thing about our industry is that all of our rates are highly regulated. We have to file for rate increases and changes. Insurance commissioner has to approve things. So, with all this inflation, things like that have been going on for a couple of years, it trickles down to us. So it's not like we're not like a milk producer who can just decide, okay, well, I'm going to increase a gallon of milk by 50 cents tomorrow. We can't do that. So it's been, we're kind of, got to be careful when I say there's some of my customers in here, so I don't want to freak them out. But it's been a couple of years of these really high inflation rates. The body shops charge more. Used car pricing is more. New cars are more. All these prices are more. That impacts us. But we haven't been able to change the rates very quickly. So we are just now getting there, but so is every other insurance company. So it doesn't really matter who you're with. You are most likely going to see a rate increase, okay? You're going to see them tightening their requirements, and that's some of what I'm going to talk about is, particularly when you start filing claims, do you want to file, do you not want to file? There's a lot of parameters where insurance companies are going to be looking for reasons not to have you as their customer anymore. And so you want to make sure that you have somebody that's kind of looking out for you. So this isn't a sales pitch about me at all, but I will make a statement. If, as I go through this, you're like, well, no one's ever told me any of that, then whoever you're insured with is not doing a very good job, okay? Because somebody should be telling you some of these things. And that is kind of the difference between, having a local maybe representative versus just some random 1-800 number that's not going to kind of get into this. So not a sales pitch for me, but definitely a sales pitch for having a relationship, just like you need to have a relationship with your financial planner, your doctor, your auto repair guy. We all have certain people in our lives that it's probably crucial to have a halfway decent relationship with. I do think insurance people, fit within that category. So that's kind of a caveat as we walk through this. And to put some numbers to it, State Farm right now, I don't know if I'm supposed to be telling this, and it's on film, so we'll see how this goes. But for every dollar we take in, we're paying out about $1.30 in claims right now. Okay, so every dollar we take in, we lose 30 cents. Well, we lose we pay out $1.30. So we make no money and lose 30 cents. So obviously not sustainable. You don't have to cry a river for them. They have other ways of making money. They make money on investing your money, large volumes of it and such. But that's the situation all insurance companies are in at the moment. They're paying out more in claims than they are taking in per dollar in premium, and that is not sustainable. Typically, they're honestly happy with about a 92% ratio. So if they can bring in $1 and only pay out 92 cents in claims, they're normally pretty happy. To me, that seems like a small spread, but I guess on millions and millions of people, it works. But that's the environment that we're in. So just kind of keep that in context. So I'm going to talk about auto insurance first. The first thing is do not carry minimum limits. And like I said, I'm going to try to be super brief, but if you look at your policy, you're going to see 3 numbers. Minimum limits are the first set here, 25, 50, 25. What those mean real quick is the first number is bodily injury per person. So if this is coverage on your car if you hit somebody else. Okay, this is what your insurance company is going to pay to repair their damages. Once they run out of money, then they're just suing you. Okay, so it's not like the problems just go away. All right, so the insurance companies pay first. So $25,000 in bodily injury per person, $50,000 in bodily injury for the entire accident. So if you got 7 people in your car, they're not going to pay more than a grand total of $50,000 in medical bills, or if you had 7 people in the car that you hit. And then $25,000 in property damage, which is typically the car that you hit. Okay. Now we had a lady I had insured that ran through a doctor's office, front pain. Joy of Tokyo had somebody run through the front of their, thing. So you can hit other things besides just a car. We had some this room here. I think we had somebody run right through that window down there one time. So you can hit other stuff. But normally it's the other vehicle. So 25, 50, 25 is what you're required to have legally. The problem there is $25,000 in medical bills. You can go through that in a heartbeat. So I had what I thought was relatively minor stuff done to me last year, and it was like $22,000. Okay, I mean it was minor type deal. $25,000 for cars. I would say half the cars running around Greenville are worth more than $25,000. Okay, so you have to think through the consequences of that. If you hit a $100,000 BMW, you're like, well, I'm in a 1961 Dodge Caravan. I don't need good insurance. And you hit a $100,000 BMW, your company's going to pay $25,000, and it's not going to go away. They're then going to sue you for the difference. You might say, well, I don't have anything. Well, they're just going to keep suing you, and they're just going to keep getting it out of you for the rest of your life. Okay? So the funny thing about it is to bump up to what I consider the minimum, 100, 300, 100, is in most cases $20 to $30 more per 6 months than what this number is. So you're getting 6 times the amount of coverage, but your premium is not increasing by 6 times. Okay? So everybody needs to go ask their carrier, 1, you should know where you're at. And 2, if this is where you're at, you should ask for a quote. Well, how do I get to here? And I think you'll be shocked at how low of a premium difference in reality that it is. Okay. All right. The next one is, a lot of y'all have rental car coverage. So if you're involved in an accident, you're at fault. Your insurance company gives you a rental car. You do need to increase that. Most companies have levels. A lot of us, including myself, we always had the lower levels because typically if you had an accident, you take your car in, it'd get fixed within a week, you get it back, everybody's happy. Okay. So right now you take your car in, it's going to sit at that body shop for probably 6 weeks at a minimum. Okay. And then it's going to take them a week after that to fix it. So everybody is running through their car rental coverage. So whatever the max is that you can get, if you have a concern about car rental, if you have one car and if you wreck it, you have no transportation, you probably need car rental. Try to get the highest coverage. Now, even that might not be enough. okay, but it's still better than some of these lower levels that we see quite a bit. I don't really see this environment changing anytime soon. The body shops, there's a nationwide shortage on body shop workers. They can't find people. I mean, it's just not a bottleneck that is going to free up anytime soon. And I have a lot of customers who have run through their coverages and they're like, oh no, what did I do? They, how's that? Oh, come on. Oh, wait.
Hey,
Now it's back doing the same thing as doing a second ago. Hold on. Sorry. Don't touch anything. Okay.
Oh, there's two peg.
Usually. In one dodge.
It's a lot of whispering. Y'all need to speak up. Can't just talk about me quietly. Okay. Okay, so we talked over rental car coverage. Don't admit fault in an accident. Okay, now I realize I'm a Christian, talking to Christians. I'm not saying lie, but don't volunteer anything at an automobile accident. Okay, now if you're asked directly, that's a different story. Okay, but when the next person comes up, you know, the person that you're involved in altercation with, and they start pepping you questions, it's not your responsibility to answer all those questions. You would be amazed at how stories completely change as soon as an accident is over. As soon as that person goes home and talks to their brother, their sister, their mom, their attorney, whoever, all of a sudden the entire story completely changes. Okay, so don't give anything on your end. You know, tell the police officer what happened, and then just leave it at that. Okay, and I can get into a lot of the details of that, but the basic premise is just be careful what you give away. You know, just be like, I never even saw that red light. Okay, well, I mean, that's not the best thing to say. So if you really did run a red light, it's going to come out anyways. Okay, but you know, there are people who've gone through yellow lights. You know, and you're allowed to go through a yellow light. All right, so there's a lot of crazy things that go on. So just, you know, keep it close to the chest and deal with your insurance company and the police officer. Don't get worked up about however aggressive the other person's being that's involved in the accident. I don't know why I put this in there, but it seems pretty self-explanatory. But do open all your mail. So, you know, one thing insurance companies are notorious for is to send you dozens and dozens and dozens of pieces of junk mail. And I get it. So you're like, State Farm, Shredder, good to go. But I also deal with a ton of people who are like, well, I never got the bill. You know, when their insurance cancels, they have a car accident, and all of a sudden things go from really bad to being really, really seriously bad. And it simply started because they don't open their mail. The only thing an insurance company is obligated to do is send you stuff via the postal system. So individual offices, you know, we might try to call customers when we can. You know, we have, you know, the same issues everybody else has as far as the right amount of workers and finding people, you know, to work and stuff like that. So we might not be able to call everybody like we normally would. The insurance company themselves, they're just required to mail you stuff. That is going to be their way to communicate with you. So if for some reason you forgot to pay your bill, something else is going on, just open the mail and read it. It actually solves a lot of problems. Don't file a claim after hours without talking to your agent. So most companies have apps, they've got websites, they've got 24-hour service numbers. Every one of those people, every one of those methods of communication are not getting you in touch with the person who actually knows you, which is your agent. And typically your agent is going to try to put put you ahead of everything else as much as possible. So if you, as an example, you call my office at 11 o'clock at night, you will get a live person. It's not me, thank goodness. And they're only trained to do one thing, and that is to take a claim. They're not trained to give you advice whether you should file a claim, whether it meets your deductible, whether your frequency is now too much, whether, you know, all these different things that an insurance agent comes in and can talk to you about. So, you know, on the minor things, Wait till the next day when you can talk to the people that you're used to talking to. If your house is on fire, call the number. Okay, that's not gonna be up for debate the next day. But if you come home and you're like, oh, somebody stole my mower, don't just go file a claim on that. You gotta talk that through. You might not even meet your deductible. You might be getting a check for $100 when it's all said and done, and then there's a million reasons why it's not worth doing that. Okay, underinsured and uninsured. So same numbers that we talked about earlier. Uninsured, you have to have by law. That's if somebody hits you, they don't have any insurance. Okay, so then your insurance company will kick in. All right. So if somebody doesn't have insurance or it's like a hit and run, there's nowhere else for money to come from besides this coverage. Okay. So sometimes you want to have pretty good limits here as well. There's also nowhere else. If your car is worth more than $25,000, you need to bump this up. There's nowhere else to get that difference. If somebody hits you and then they took off and they never find out who it was, this is the only coverage. This uninsured coverage is all there is for you. Underinsured, same limits again. You can pick a variety of them. That's if somebody hits you, they have insurance. Maybe they have the state limit, like we talked about on the first slide of 25, 50, 25, and they did way more damage than that to you. So then underinsured will kick in. The other company will pay their max, then your company will kick in more, and then when that runs out, a lot of times your personal health insurance, things like that will kick in. So there's some staggered things there as far as coverages go. But you do want to make sure these are correct based upon your individual circumstances. This is a highly tailored coverage depending upon what kind of health insurance you have, what kind of car you drive, some of these different factors. So it's not easy to just check it off a list as you're buying it online per se. Briefly understand how your medical coverage works, and this is how your personal medical coverage works. So we're not talking about coverage through your car policy. Just understand your own personal medical coverage. I deal with customers every day. They have no clue what their limits are, what their deductibles are, anything. And all those numbers come into play to determine, well, what kind of car insurance do you need? If you're going to eventually rely upon your medical coverage, what is your medical coverage? Well, you don't even know what it is, then it's very difficult to make a solid recommendation on what kind of limits you need on your car insurance, okay? Anything financial related in your life, you obviously should know about, but you should know your medical coverage, your deductibles, co-pays, what's the max they're going to pay in the course of a year, all these things. If you're just like, well, I worked so-and-so and I checked the box that I want coverage, I mean, you need to just go a little bit farther than that, or I would encourage you to. Don't think okay, so I'm transitioning over. We'll answer some questions here in a second. I'm transitioning from car insurance to home insurance, okay? There's only two topics that at least I'm going to talk about. Don't think on the home insurance side. So home insurance is your house, renter's insurance if you rent, if you own rental property, like Alex talked about, it's covers you're carrying on your rental property. So the first thing is, don't think your policy is a maintenance policy or a home warranty, okay? Two totally different things. So your insurance policy is for catastrophic things, and they're all named in your policy, okay? If you can't find it in your policy, it's not covered. So if you're like, my air conditioner stopped working, is my insurance going to cover it? Okay, does it say that in your policy? The answer is, by the way, is no. So, because that's more like a home warranty issue, that's like a maintenance. So anything that's a maintenance type thing that you as a owner of that property should be keeping up with is probably not covered by insurance. Insurance is more accidental things that happen, acts of God, things like that. So if your air conditioner gets struck by lightning, okay, now it's covered. Okay, because if you look in your policy, lightning strikes are specifically listed. Okay. So just I always get a lot of questions about various, my car was parked in the garage and then the ceiling collapsed on it. Does my house cover my car? It doesn't. You got to look in your policy, read your policy, know what's covered in it. And I've said that a few times already, but if there's any takeaway that you take, that you get from tonight, I would say, one, have a relationship with an agent somewhere. And two, read your policy. Actually know your policy, because every policy is different. Homeowners insurance with one company and homeowners insurance with another company is not necessarily the same. There in some cases, very distinct differences. So just understand what you're paying your good hard-earned money for, or ask somebody to explain it to you, type deal. Shut off your water when you go on vacation. Comes up all the time. The lady in my neighborhood, she left for 3 weeks. I can't remember. She's a foreign lady. I can't remember what country she went back to. But her pipe burst upstairs while she was gone. And when she opened her back door, when she came home, water just poured out. So it had ran for at least a week, 2 weeks. The ceiling had collapsed on this Czechoslovakian piano that was worth like $80,000. It was, I had the house insured. It was not good, type thing. It was a massive, massive loss. So all that could have been avoided by just shut off your water, when you leave. Water is always kind of a hot topic. So most houses have a single shut off valve, or somewhere in the yard, there's a cutoff, where you can just shut everything off totally. More water issues, check for leaks. So you need to look under your kitchen sink every now and then, your bathroom sink. You need to look behind your washing machine, your dishwashers, and just make sure there isn't some kind of slow leak that you don't see. Because this also happens all the time. If somebody walks into the kitchen, 6 o'clock in the morning, they get their coffee, they're all groggy, and they're like, why does my floor feel so spongy? And it's because it's been leaking for a year and a half, and it's just now kind of showing itself. So your insurance does not cover anything that happens over time. The words the attorneys use, sudden and accidental. So if it's not sudden and it's not accidental, we're all wasting our time. So slow leaks, not covered at all. Wet rot, dry rot, a lot of times mold, things like that. All of these are very easily avoidable, so just know your house. Just check from time to time. And if you don't want to open up and check everything, the easiest way to do it is make sure everything's off. Go to your front yard, look at your water meter. If it's spinning or if it's moving, there's water flowing somewhere. All right? It should be at a dead stop. So if it's moving at all, you have water flowing. Now, if you have a sprinkler system, you could have a leak out there. You could have a toilet running. That's not really a leak. You're just kind of wasting water. But I tell everybody, go check your water meter, from time to time. Don't assume you have flood insurance. This comes up in Greenville every now and then. We've just had a torrential amount of rain here lately. Haven't had a lot of calls on it, but 2 or 3 years ago, I think it rained for like 3 weeks straight. And a lot of basements in Greenville got flooded just because the ground could not handle all of that water, had nowhere to go but through concrete walls and things like that. Any water coming in from the outside on your house is not covered unless you have flood insurance. And flood insurance is through the government, which means it probably stinks. And it actually does, but because there's all kinds of parameters that go along with it. So if it's only your house affected, probably not covered even if you have flood insurance. It's got to be a certain amount of houses, a certain amount of acreage. There's all these parameters, but you have to buy a separate policy if you're worried about water coming in from the outside. So if you live on a creek or a river, something like that, and rising water is a concern, don't think that your homeowner is going to cover it, because it's not. Same thing with earthquakes. Most people don't know this, but your house is not covered for earthquakes in most cases. There are some policies or some companies that might inherently cover them. State Farm doesn't. You have to put an endorsement on there. We have earthquakes in Greenville all the time, or at least they register on the Richter scale. So we have tremors a lot. I mean, I would say most or some people in the room have felt tremors. So it does happen. So just know if you come home and your house is gone and there's a giant, thing, that unless you have earthquake coverage, there is no coverage. A good barometer, though, is a lot of banks. Most banks do not require you to carry it. So that kind of tells you the level of a risk. If a bank is going to finance you money in Greenville but not make you carry earthquake and coverage, they're not too much worried about it. So the risk is relatively low. I'm just telling you in case you have an earthquake tomorrow, okay? You'll be like, hey, he told us about it. check your property for dead trees and limbs. So this kind of goes back to the maintenance thing. If you have a dead tree, not covered by your insurance company. So if it falls and hits something, they can deny that, okay? They can basically say, look, you knew it was dead. You could look at it and tell it was dead. Now, they're not asking you to be an arborist. So if you look at it, it's got green leaves, you know, but it's rotted in the middle. If you can't tell that, then they classify it as alive, all right? It has to be clearly dead to the common person to be classified as a dead tree. But you still need to look around, because if that thing falls, hits somebody, hits something, you're not going to have coverage. You know, you really should prune dead limbs and trees anyways. This is a good one. I don't know why more people don't do this. Make a recording of your entire house and all your belongings. So back in the day when I first started, we had this little notebook that we'd give people, and you would write out everything that you owned, and then they'd give it to us and we'd keep it. You know, thankfully we've come a long way from that, because that's incredibly tedious. But if you go home right now and your house is a smoldering pile of ashes, the insurance company's going to hand you a piece of paper and a pen, and they're going to say, tell us everything that you owned. And that sounds easy, but it's not easy. You have to trust me that you will forget more than you're going to remember. And I always say people, well, how are you going to know if I'm cheating? How are you going to know if I say I have 10 pairs of jeans and I only had 5? I mean, we're not. But you're going to forget so many things that we're going to come out ahead, okay? There's no doubt about it. So the best way around that is to open all your drawers and just walk through with your phone. Just record. You know, if my wife sees that top layer, she can tell everything else that's in the bottom of it. So just record everything, shoot it off to the cloud, shoot it off to a friend or whatever. If you have anything that's unusual, you know, you have Van Goghs lining your hallway or whatever, record those, take pictures, have some kind of proof. The insurance company doesn't want to hear, you know, that you lived in a $125,000 house but had a $400,000 Van Gogh. You know, they're fine, but they're going to want to have some proof of that kind of thing. So if you have something different, you know, a lot of people have one-off antiques, things like that. You know, document that kind of stuff. Don't put yourself in the position where it's just all trouble in the course of a fire or something like that. Okay, so that is my number. You can text me, since there's not that many people here. But if you do think of something, I've always told everybody at church they're welcome to text me, ask me whatever, and then I'll open it up to if there's just any questions about anything that we just talked about.
What if you have cash in your home? Is that covered in a fire?
Cash is not covered. Cash is covered up to $200. So if you listen to a few people online that are like, the banks are going to fail, take all your cash out. I mean, I'm not saying it's not true, but just think about where that cash is going to be put. You know, it needs to go in a very, very good safe, not under your mattress, because $200 is all they're going to pay.
What about gold and silver?
Gold and silver has limitations on theft. So that's a great question. So there's a few items. So let's say that you have a $400,000 house. They're going to insure your personal property for 75% of that value, okay? So $300,000. So you get $300,000 of coverage on all your stuff. Gold, silverware, all fits within that, except for theft. And then there's limits. So, and typically they're pretty small, like $1,500 an item, $2,500 total. Same thing for silverware. Same thing for guns, furs, although who has furs anymore? But those all have theft limits. Now, if you have a fire, then they're all covered under that $300,000. So gold is not considered the same as cash, if that was kind of the question. But it does have limits for theft. And that's typically, I'm only quoting what I know from State Farm, but the numbers might be a little bit different from carrier to carrier, but the concept is pretty much going to be the same through most. So, all right, any other questions? Yes.
So what if the dead tree is on your neighbor's yard and it falls on yours?
Right, good question. So let's say the tree is alive on your neighbor's yard and falls on yours. Your neighbor is not responsible, okay? You were the one impacted by the tree. Your neighbor did nothing. It was an act of God. They couldn't have changed it if they wanted to. So your insurance is going to pay for the damage caused by your neighbor's tree and vice versa. If the tree's dead, then the first thing you need to do is send a certified letter to your neighbor asking them to remove it. That creates a paper trail showing that you did ask them in case it shows up in court. Because it can be a situation that goes to small claims court. If it's a big thing, like the tree falls, crushes your house in half, then a lot of times your own insurance company will still step in and pay and then subrogate or sue back against that person, not against the person's insurance company, because they're not going to pay, but against that actual individual, which is why if you have a dead tree, you need to get rid of it, because ultimately you could be held personally responsible for whatever it does. Even if another insurance company pays, they have a litany of lawyers on their payroll to go get that money back, and they're very patient.
What do you do for a deductible? I've heard it's better to have a high one because, what are the odds that your house burns down?
Yes, so that goes back. I'm a huge fan of high deductibles. Okay, you can listen to Dave Ramsey, you can listen to financial advisor, you can listen to whoever, but everybody's gonna tell you to have emergency funds, have a certain amount of money set aside. Okay, so there's no reason to carry a low deductible unless you just can't scrounge together the money. But you're paying extra money. The higher the premium, the lower the deductible. So the higher the deductible, the lower the premium. All right, and then also, most of these policies need to be catastrophic. Like you said, if the house burns to the ground, you don't really care that your deductible was $5,000. In those situations, there's a multitude of ways to actually make up some of that deductible. Okay, so you don't want to cover yourself if somebody stole your mower. You just want to replace your mower, kind of deal. So I'm a fan of bigger deductibles, but you can run quotes and see, because sometimes that's also weird. It might be, to go from $1,000 deductible to $5,000 deductible might save you $40. Okay, well then that's not worth it. So you just got to run some of those scenarios to see, and it varies from car insurance to home insurance. Some of those differences. Shane.
I will hijack, but the UIM underinsured.
Yes.
Make sure you check that. As somebody who's done some car accident cases or personal injury cases, that may be the only thing you're going to really recover, because the person who hits you might have the minimal policy limits, and if they do, they also probably have limited personal assets. So your chance of recovering or maximizing what you might need to help cover some of your expenses is your own insurance policy or an UIM. And then another on that point or similar to that, can you talk to us a little about umbrella policies?
Yes, great point. So an umbrella, well, one thing, before I say anything about the umbrella policy, just to say it again, an insurance policy is not the place to go skimp money and try to save money. I'm not telling you don't go to try to save money from carrier to carrier if that's what you want to do. But don't save money by reducing your coverages down to nothing. There are certain things in life worth paying for. You might think insurance is a complete scam. That's fine if that's what you think. But if you don't think that, it is worth having higher coverages. Save the money somewhere else. Cancel one of your 42 different streaming services. Don't go out to eat. I mean, honestly, save money by comparing companies, but don't save money by lowering coverages. You really can get burned. And if you drive around in Greenville at all, you should know that it's just the wild, wild west. It's just a ticking time bomb until something's going to happen to you. I look around all the time. All people are doing is eating, looking at their phone, and putting on makeup. And that's one person all at the same time. Okay? So it's just a matter of time. I drive, some of y'all know, I drive this massive white truck. It's got all these LED lights, all this kind of stuff. I cannot tell you how many people on a weekly basis completely pull out right in front of me. Like, if you can't see me, then you are not paying attention. And the truth is they're not paying attention. So what Shane's saying is correct. And then going along with that, a liability umbrella. So the first slide with the liability limits that we said should be at $300,000, that's just a base recommendation. You cannot really, if you talk to an attorney, you talk to a financial planner, they will tell you you really cannot have too much liability. And so what you can do is you can buy a liability umbrella, additional $1 million of coverage, $2 million, $5 million, whatever you want. And it's an umbrella, meaning it covers your cars, covers your house, your boat, your rental property, whatever you have. It's an umbrella that extends an additional $1 million or so of coverage beyond whatever each individual policy covers you. So if you got 300,000 on your car, you use that first, and then once you exhaust that, then you have another $1 million under an umbrella. And again, if you talk to a financial planner, they will tell you this is one of the integral pieces of a solid financial plan is a liability umbrella. So thank you, Shane. All right, I thought I saw one other person. Is that it? Yes, ma'am.
Have you seen a difference with, well, I mean, do you like for one insurance company?
Right.
But as far as how well certain companies take care of their manufacturers when there is an aspect where some are better?
Yes. So I would never stand up here and say names. So I'm not gonna say names, but there's 3, 4, 5 companies that I would say do really, really well with their customers. Now in a private conversation, I'll say names all day long. Okay. And then there's a litany of companies that really don't do well. The truth of the matter is they're all struggling. So I'll use my company as an example real briefly. We used to be known for how we handled accidents and claims and everything else like that. Well, COVID hit, all these people stayed home, people never come back. State Farm can't find good help. So, a lot of times you call and this person has no clue what they're talking about. They've been on the job for 3 weeks. So the customer's frustrated. So I deal with that kind of stuff all day. I would say that all carriers' customer service has slipped unequivocally, but there's still some that are better than others. There are some that have been that they're known for shortchanging you on your car value, trying to nickel and dime you, things like that. So more of a private conversation, but there is a distinct difference. Yes.
Because of the rapid appreciation of property and the inflation factor with building materials.
Yes.
Our homes now largely underinsured.
Yes. So again, you need to reach out to your agent if your agent hasn't reached out to you. I have had multitudes of conversations with folks so I talked to, I'll be finished after this. I talked to 3 builder friends of mine in Greenville. I said, what's your cost per square foot? They were, that can be all over the board, right? Because all kinds of factors. But they landed anywhere from $200 to $250 a square foot, okay? Then I would talk to the customer who had been already ran through State Farm software to determine what they should have, and they would be sitting at $170 a square foot after State Farm had ran it through their calculators, basically meaning they were perfectly fine to insure it at that number. But the customer was really underinsured by $30, $40, $50 a square foot. And so that's where I would have that conversation, like, we just need to up coverage. So that is true. You have to go, the software that they use sometimes will not keep track quick enough. And your insurance company is only at best reviewing that once a year, at best. Some of them are only doing it every 2 or 3 years, okay? So you do need to make sure that your house is appropriately insured based upon the appreciation that we've had and also based upon the building cost. Yeah, that's a great point. All right. Very good. Thank you.